Another way that a good financial reporting system helps us to manage our company is to establish realistic and profitable pricing. If our pricing is actually based on facts rather than on what the competitors are doing or in reaction to customer pressure, we can begin to sell and deliver jobs that are truly rewarding and profitable. I've worked with clients who, after they could see their job costs, realized that they needed to increase their sales price by $10,000, $15,000, and even $20,000 to realize their target gross profit. Multiply $15,000 by 100 units, and you're looking at a bottom line increase of $1.5 million. Now there was a client who was glad to pay their accounting bill. Accurate numbers are also going to let us measure winners and losers and determine exactly why they are winners and losers. Did we miss something in our estimating? Did we have labor overruns? Were we mistakenly overcharged by one of our vendors? Did we have to pay overnight shipping for a purchasing mistake? Did we fail to charge for all of our change orders? Are we charging enough? An accurate set of job cost reports will answer all of these questions and more. When you have good numbers, you can also take a look at your company's trends and monitor them. For instance, are gross sales going up or down over time? How are the percentages of labor and subcontractor costs changing over time in relationship to our sales? Is our gross profit margin increasing or decreasing? Is the owner taking home more money or less money than 2 years ago? We can also determine what specialties or niches are paying off for us. If our trends tell us that we're doing better with our decks than our kitchens, or the Burlington model of our spec home is doing better than the Chesapeake model, that tells us where we want to focus our energies and resources. Creating one or more niches or specialties is a way to differentiate yourself from the pack, call attention to your company's specific skill set, and deliver value-added service. But you want to do that with your winning products and not vice versa. So, in order to amplify the star players on the team and tune out the losers, we need to know the numbers. The next two topics aren't quite as exciting, but they're extremely important. How do you plan and prepare for the unexpected? You'll have the ability to more intelligently consider and prepare for contingencies if you know what your numbers are. And this next section reminds me of the Gambler song. Remember? You've got to know when to hold 'em, know when to fold 'em, know when to walk away, and know when to run. Of course, in the song, the gambler could at least see the cards he was holding in his own hand. This is not the case for many businesses. After you get your accounting system running like it should, you'll be able to actually see the cards that you hold in your hand. So you can continually decide whether you need to expand, or shrink, or move your business, or stay in the same place. Is it time to buy property, or is it time to sell? All of these are critical day-to-day decisions for which the company owner needs useful, timely, accurate financial data at his or her fingertips to make the best decisions possible. Another reason that we want to have a good accounting system in place is so that we can have control over our accounting and our daily operations. What does the term control mean? Basically, in very simple terms, control means that we're doing things to make sure that the right things happen and the wrong things don't happen. For instance, typical controls would include job descriptions, estimates, budgets, approval processes, and so forth. And we would have procedures in place, such as performing bank reconciliations and some basic division of duties to avoid or minimize having the wrong things happen. The proper types of controls can also help to prevent and/or detect fraud. Good numbers can also help us to enhance our cash flow. We can control our cash flow by activities such as getting our invoices prepared and delivered to customers promptly, closely monitoring receivables, speeding up the paperwork on bank draws to which we're entitled, and managing payables. When we have enough money on hand, we can reduce internal cash flow worries, reduce late fees and penalties, improve our vendor relationships and responsiveness, and be sure to take advantage of vendor discounts.